Assalamualaikum warahmatullahi wabarakatuh. Before I present, let me introduce myself. My name is Vina Abidatin Istiqomah. I am from the first semester Development Economic Study Program of the Faculty of Economics and Business at Trunojoyo Madura University. I will present the material of taxation from the English Language Economics course mastered by Miss Fadrina Lailin Amruwah MPD. Before we get into the material, what is taxation? Taxation is a term for when a taxing authority, usually a government, levies or imposes a tax. The term taxation applies to all types of involuntary levies, from income to capital gains to estate taxes. So, taxation can be a noun or verb. It is usually referred to as an act. The resulting revenue is usually called taxes. Inside the matter, we will discuss about taxation and government. What is the role of government? How much should government tax? Types of taxes, the cost of taxation, the benefit of taxation, principle of taxation, social security taxes, taxation and government. For government to provide goods and services such as national defense, social security, national parks, etc. It must have money. The government raises money several ways, including user fees and taxes. User fees are fees paid by those that use the good or service. It is a price. Taxes may be paid by everyone or only those that use a good or service. Who pays depends on the type of tax. What is the role of government? The level of taxes is determined by the amount of government service and goods provided. The government's rules include providing a, providing a stable set of institutions, law and rules, promoting effective and workable competition, correcting for externalities, creating an environment that fosters economic stability and growth, providing public goods, adjusting for undesirable market results. How much should government tax? The government must raise revenues equal to the cost of providing the amount of goods and services that its citizens demand. Types of taxes. There are many types of taxes: personal income taxes, corporate income taxes, excise taxes, value-added taxes or VAT, property taxes, social security taxes. Direct taxes is a tax that a person or company pays directly. For example, income taxes and property taxes. Indirect taxes is paid by a third party. For example, when you buy a TV, there is a VAT charge which is included in the price. The customer does not pay, but the firm who sells the good is responsible for paying the tax to the government on your behalf. The cost of taxation. The cost of taxation include the direct cost of the revenue paid to government, the loss of customer and producer surplus, the cost of administering the tax codes. When government institutes taxes, there is a loss of customer and producer surplus that is not deemed by government. This is this is known as deadweight loss. Graphically, the deadweight loss is shown on a supply-demand curve as the welfare loss triangle. The welfare loss triangle, a geometric representation of the welfare loss in terms of misallocated resources caused by a deviation from a supply-demand equilibrium. There are other costs of taxation. Resources must be devoted by the government to administer the tax code and by citizens and business to comply with it. The benefit of taxation. The benefits of taxation are the goods and services that government provides. Some of these bene- some of these benefits are part of the basic institutional structure of a market economy that allows it to work efficiently. For example, the basic legal system takes on the qualities of a public good. National defense. Other benefits are provided for reasons of equity or because they provide positive externalities. The benefits of taxation generally focus on goods that could be supplied by the market but are publicly supplied. Principle of taxation. The individuals who result in benefit of the good or service should pay the tax necessary to supply the good. For example, gasoline taxes and import taxes, both paid by travelers. The ability to pay principle states that individuals who are most able to bear the burden of the tax shall pay the tax. Those who have higher income can afford to pay a greater proportion of their income in taxes, regardless of the benefit. Example, a progressive tax such as the income tax in Cyprus. The principles of taxation are difficult to apply because, among other reasons, the, the two principles often conflict. Social Security taxes. First, Social Security taxes are payroll taxes for a government-run retirement program. Second, both employer and employee contribute a percent of before-tax rate to the Social Security Fund. Thank you for attending my presentation. I hope you I hope you like, sub, subscribe, comment this video. Wassalamualaikum warahmatullahi wabarakatuh.